Starting now, Equity Mates, with thanks to our mates at Spaceship.
Welcome to another episode of Equity Mates. It's Thursday, final episode for the week, which we're always very sad about because it means that we're not back tomorrow because we love doing this, Ren. But
You're not sad about it, mate. You'll be on the golf course tomorrow.
No. It does mean I'm closer to another Essendon game, though. But anyway, my name is Bryce. As always, I'm joined by my equity buddy, Ren. How are you going?
I'm good, mate. I'm good. I'm looking forward to this episode. We've had a number of requests from the Equity Mates community to talk about just like what's going on in the platforms that are available to retail investors, what's changing in that space, and also what new products are being issued that everyday investors should be aware of. So Bryce has spent the weekend hunched over his laptop, scrolling through pages of product issuer updates and Twitter news to really bring us a condensed version of things we should be aware of from the last month.
That's right, Ren. After hours and hours of relentless preparation, I've distilled this episode down into a number of key ETFs that I think, most importantly, our community will benefit from us talking about, as well as talking about the rise in a couple of, I wouldn't say investing app, but money apps that are starting to come to market.
So this is going to be a great episode for me. I'm just really going to kick back, relax, and just let you educate me on all things ETFs and platforms related.
Great.
Yeah, but look, I think there's no doubt that one of the biggest focus areas in the Equity Mates community and the retail investing community, actually probably the economy more generally, is
society,
climate change and sustainable investing. And the product issuers are responding to that force, I guess.
Absolutely.
And the top three ETFs that you've listed here are three climate change related ETFs.
Yes, from some of the biggest players in the game. So you're right, they are, I guess, reacting to the demand that we're starting to see from, well, not starting to, but that we're continuing to see. We've had BetaShares, VanEck, and iShares, or BlackRock, all launch climate change related ETFs in the past 6 weeks or so. And for various reasons, you may or may not like them, but let's start at the top.
You're going to tell us whether you do like them or not.
Yes.
But you mentioned three issuers there. Just give us the overview. Tell us about the three ETFs. What are their ticker codes, and what do they purport to do?
Great use of the word there. Great use of the word purport, which we will pick up on in a bit. But look, the first one is the BetaShares Climate Change Innovation ETF. Its ticker is ASX. Its ticker is ASX. Its ticker is ERTH, Earth. This one has got a lot of chat within our community. This ETF is 100 leading global companies that derive at least 50% of their revenue from products and services that help to address climate change and other environmental problems through the reduction and avoidance of CO2 emissions. So that's the first one, Ren, and we'll talk about some of the companies in there in a second.
Talk us through the three, and then...
Then the second is VanEck Global Clean Energy ETF, and the ticker is CLNE. It is 30 of the largest and most liquid companies involved in clean energy production and associated technology and equipment globally. And then the third is one from iShares, and it's the Carbon Transition Readiness ETF. Its ticker is LCTU. It's actually listed in on the New York Stock Exchange. And it is all about capturing that energy transition that we're seeing with US companies best positioned to capitalize on that movement. And if you'd remember, a few weeks ago we had a couple of experts come in to talk specifically about the energy transition going on over in the UK, but that is a US focused ETF. So those are the three.
Yes.
The biggest difference that I've noticed here is the concentration and the number of stocks.
Okay, talk us through it.
So look, we all know that ETFs are designed to give you a broad range of a great exposure, but it's really important to understand, I think, when it comes to ETFs, to take a look under the hood at what you're actually buying. And we've spoken to many experts, and whenever the question comes up, how do I know what is right for me? The answer is always take a look under the hood. Because just because, for example, iShares, the Carbon Transition Readiness ETF, it's capturing all of these companies. Take a look under the hood. 350 companies are part of the holding.
Yeah.
Let me read to you the top.
I love this. Love this.
Let me read to you the top 10 for this company. And remember that this is sold is a little bit different to the S&P 500. It's a readiness ETF for clean energy. Apple, Microsoft, Amazon, Alphabet Class A, Facebook, Alphabet Class C, Tesla, Berkshire Hathaway, Medtronic, and JP Morgan Chase. How many of those have you heard of before?
9.
Yes. How many of those are different to the top 10 holdings of, say, the S&P 500?
Well, the top are exactly the same. Medtronic is higher.
Yes.
Tesla, is that how high it is these days?
It's up there.
Yeah.
Yeah. But this is my point. So 350 stocks in this ETF, compared to, say, for example, the VanEck Global Clean Energy ETF, which has a concentration of 30 of the largest stocks that give exposure to clean energy production. How many of these have you heard of? And I don't think I've actually got the chart. Have you heard of EDP, Renovius, Enphase Energy, First Solar, Vestas Wind, Solar Edge Technologies, Verbund, Simons, the list goes on.
Okay, I've heard of a couple of them, but not many.
Yeah, so my point here is that, you could easily buy the iShares based on the name, Carbon Transition Readiness. And yes, maybe they are all positioning themselves to capture the transition to carbon capture. And you're thinking about Facebook and Amazon, I don't know how they're doing that. But if you're wanting concentrated exposure, I think there are better options out there when it comes to these sorts of clean energy, climate change ETFs.
Yeah. So I think to distill it is if you owned an S&P 500 index fund and you owned this Carbon Transition Readiness ETF, you're not actually going to see a real divergence in performance. It's going to be those same mega cap tech stocks driving the returns in each.
That is a critical point, Ren, is that yes, the argument could be made that 350 stocks, maybe 100 of them are going to be very different to what's in the S&P 500, but because it's market cap weighted, the majority of the holdings are dominated by these big tech companies. So you're not actually going to be capturing the movement of these other companies that are playing in the field because they're dominated. So yeah, you're right. Pay attention to what's under the hood. I think the beta shares and the VanEck have a much more concentrated exposure. Funny though, you look at the beta shares, they have companies that derive 50% of revenue from products or services that address climate change. And their top holdings, like DocuSign is in there, Zoom, Tesla, but then there's others, Train, Infineon, so a number of others that I haven't heard of, but yeah.
I'm surprised DocuSign and Zoom, but maybe it's because it's
less paper.
Yeah, less paper and less work travel.
I think so, yeah.
Jeez, Peter Share's stretching the definition there.
Yeah, because it does have reduction or avoidance of CO2 emissions.
True,
so if you're not printing to sign and you're using DocuSign, I guess you could make that.
But like, what's the life cycle assessment of like the energy used for the computer?
Yeah. But look, as you can see, 3 new ETFs to market, and I'm sure a lot of them causing a lot of excitement in the Equity Mates community. But from my point of view, after peeling back the hood, A, fees are different. B, your exposure to US. Some of them are heavy exposure to US, heavy exposure to tech. So you really need to have a look at your overlap.
So Bryce Lesky is really letting fly here and letting a $9 trillion asset manager know his feelings. iShares, BlackRock, Bryce Lesky's coming for you.
So we will move on, Ren. Another new one that's come to market with a lot of excitement is the BetaShares Cloud Computing ETF. No doubt, big space at the moment. We had someone on not too recently to talk about the industry, and there are plenty of investment opportunities. So they have an ETF that gives exposure to leading companies in global cloud computing. It is Australia's first, and its fees are 0.67%. So yeah, worth checking out. I really like that one.
Okay, you're not going to savage that one.
Not going to savage that one. I like world firsts. I like Australia firsts. I like innovation. This is an Australia first, and certainly when we were having our interview about cloud computing with the name of the expert escapes me, but Natalie. It was certainly an area that I really wanted to pay a lot more attention to and get some investment in. So glad that that's come to market.
Okay, so you've got two more products, ETFs, that have been issued in the last month or so. Quickly let us know what they are.
We've got the VanEck MSCI International Small Companies Quality ETF. So they're chasing 150 international developed markets, small cap quality growth sectors around. The reason I like this one is because we've been chatting a lot about small companies and small caps and the opportunity it provides. This provides a good opportunity to get in on that space from a developed market point of view.
Yeah, I'm always a little I'm always a little bit skeptical of like a small cap index per se. It feels like sometimes there needs to be a little bit more of active management. So I'd be interested to know what the screening is there.
Yep.
I'm assuming you haven't prepared an answer to that question.
I will take that as a note to prepare for next time. And then to close out, there's another one from VanEck, and I put this one in there because it's their International Value ETF. Interesting time to launch a value ETF, depending on which side of the fence you sit. But they I did do the research on this, Ren, and they look at value from the point of view of forward price to earnings, enterprise value, and price to book. Those are the three metrics that they apply, and there's some good detail. That is based on the MSCI World ex-Australia Value Top 250, so no Australian companies in there.
26% in Japan.
Yeah, very interesting.
Yeah.
So top was obviously the US, and then Japan coming in pretty heavy after that. So not surprising though. I think there's a lot of companies over there that have been hit from a share price point of view.
We've interviewed some value managers over the journey on the podcast, and Japan seems to be a common theme for value managers these days.
And another interesting point before we do move on is that, so it does track, as I said, the MSCI World ex-Australia Enhanced Value Top 250. It has outperformed the world index by 3.1% since 1999.
There you go.
Yeah, so value still kicking on.
Still kicking on. So there we go. That's 6 ETFs that have come to market in the past month or so.
Yep.
And I think the fact that that's more than one ETF a week just shows the pace at which these products are coming to market. And you're right, the pace, you got to look under the hood.
Yeah.
You can't own them all.
Can't own them all.
So make sure you're happy with what you own and you know what you own. Now, that's enough about products. Let's talk about platforms, because you've also done some work on some apps.
Just as ETFs are flooding the market, so are apps. Feels like there's a new one every week. Crypto apps, sort your money apps. So we've pulled out a couple that we really like here at Equity Mates, or perhaps have a few opinions on. Can't go past Bamboo. There's no doubt that crypto is a space that is very challenging to invest in if you're not really sure what is going on. Bamboo allows you to micro invest into precious metals, as gold, being gold and silver, as well as digital assets. At this stage, that is Bitcoin and Ethereum.
Think of it as acorns or rays for cryptocurrency.
Yeah, beautiful. So it takes
Beautiful.
rounds up your transactions just as you would for acorns or rays. Once you get up to $50, you can put it into a portfolio of your weighting between gold, silver, Bitcoin, or Ethereum, and drip feed that in over a long period of time. Perfect dollar cost averaging. So we both use it. And I think it's definitely worth checking out. I think it's a game changer in the crypto space. As a side note, if you do sign up, you can use the Equity Mates code and it'll give you $10 of Bitcoin. But I'm not just saying that. I think this is a really good app that is letting people dip their toe into the crypto space.
The Equity Mates code is Equity Mates, just to be clear.
Yes, Equity Mates code. So
that's Bamboo. Are there any other platforms that you want to talk to us about?
There are a bunch, but I think what I'll do is just summarize it by saying there are a lot that are coming to market now that reckon that you can sign up, plug in your bank account details, it'll pull all your information, and then it will use AI technology, they're all throwing that around, to help you make smarter budgeting and spending decisions what you need to be careful of is A, who you're giving the data to, B, the security, because not all of them are using this consumer data right, regulation. The only one doing it is a company called Frollo. Consumer data right is a regulation from the government that gives you the right to share your data between providers of your choosing. If you were to sign up to a number of these, you have to sign in with your bank details and your login. What this does is tells the two institutions that you're trying to connect to share the data with you without you actually sharing any of your personal information. Okay. It's a regulation from the government. They allow institutions to talk to each other and scrape your data. That way you have full control over it. Frollo is the only one in the space doing that at the moment.
So you've got some others listed here: Money Brilliant, WeMoney, Doe, which is ASX listed, but the product hasn't launched in Australia yet.
Yeah.
But Frollo is the only one that uses this consumer data right.
Yeah.
But I think we're really seeing a trend for those, I guess you'd call them personal finance apps.
Yeah.
Helping people take control of their money, their budgeting, getting their cash flow under control, which is great.
Yeah.
But I think the key takeaway from my perspective at least is that there's heaps out there.
Yeah.
And a lot of them are going hard on marketing to acquire customers. But there's choice, and don't use that choice as a consumer.
Use the choice as a consumer, and I know a lot of people have concerns around security and privacy, so definitely consider that consumer data right, or CDR, when you're making these decisions. But there you go, Ren. That's a wrap.
There we go. I feel
did
like
we make it through?
We did, but I feel like if you're going to give us an update next month, we're either going to need more time, or we're going to need to tell the product issuers to just slow down a little bit.
Plenty coming to market. I hope that we were able to provide some sort of value. If you would like us to give our thoughts on some a product that you're using, or perhaps some ETFs or funds that you're thinking about investing in, we'll provide a soft level of opinion. We won't go too hard.
I can't wait for BlackRock to reach out to you.
I've just killed all sponsorship opportunities. But look, anyway, that brings us to the end of another episode of Equity Mates, last for the week, and Ren will be back next week.
Sounds good.
Equity Mates, with thanks to our mates at Spaceship.